Welcome to your Fortune Friday Ask Me Anything series. I'm Priyanka Bhatia from Women on Wealth, and today I'm right here with you to answer all the questions that you've sent me. And thank you so much for sending me so many questions, and I'm overwhelmed. I trust I can manage to answer as many as possible in the next 10 to 15 minutes. So let's give our best attempt and go for it. So, okay. The first question that I have is from Rupal, and Rupal is asking, what are the good investment options for senior citizens? So, senior citizens are people who are over 60 years old, and what are the best investment options for them? So, senior citizens, now most senior citizens don't have an income. So they are dependent on whatever fund they have collected and grown for their entire retired life. For women, the retired life is even longer. So from age 60 to, you can say, age 90, because women tend to outlive men. So yeah, their retirement years can be very many. Which means if your retirement horizon is so long, which means from age 60 to say age 90, then 30 years for your fund to kind of support you is tough unless you really grow your money. Okay, so if you don't grow your money in that 30-year horizon, it will be very difficult for any fund to kind of manage, to help you manage your expenses. So it means equity has to be one part of your portfolio. So even if you are a senior citizen, doesn't mean you can stop investing in equity. It can't happen, because equity is one of the top ways to grow your money with velocity. So equity has to be one part. Now if you want to derive an income, then there are various ways in which you need to divide the fund that you've collected or grown till now. A certain portion of the money has to be in equity, like I said. A certain portion of money can be in fixed income investments. So fixed income investments are investments where the money that you are investing is absolutely safe, and it helps you generate an income. So example, senior citizen savings scheme, okay, or post office monthly income scheme. These are schemes that help you generate an income, and it helps you save the fund from any kind of volatility. So there's a certain portion of money that has to be kept in fixed income investments, which help you generate an income. There's a certain money that has to be kept in equity so that it is growing and it is beating inflation, because these investments, which are fixed income investments, are not going to beat inflation. Which means, in a way, your fund that you've collected is reducing in value. So this has to be compensated, right? Now, how is the compensation happening? It's happening with equity investments. So certain portion of money invested in equity, certain portion of money invested in fixed income investments, which help you generate an income, right? And the balance, if you're coming in the tax bracket, then it also has to be saved from taxes. So these are the three investments that come to my mind, and because you are investing in equity to grow your money, a little hedge in terms of gold is required. So this is how I see any senior citizen dividing their portfolio. Okay, any senior citizen managing their portfolio has to be in some way like this. Okay, hello everyone. I can see some of you are sending me more questions. I get that. Thank you so much. First, I will answer all the questions that I have already received from you guys, from all the stories and posts that we had put. And then after that, if we are left with more time, I am surely going to take more questions. So, Sakshi, hey Kaveri, hi, Namrata, okay, yeah, let's see, okay, let's see how many questions I can answer today. So I'm going straight into the second question. The second question is from Shilpa, and Shilpa is asking, What are financial milestones? So financial milestones are your financial goals, something that you want to achieve with your finances, right? So what is it that you want with your money? That's something that you can only answer for yourself. I can give you some ideas. Do you want to buy your own property, build your holiday home, build your financial freedom? You want to free yourself from all the financial constraints in life. You want to build your child's higher education fund, your retirement fund. You want to collect a fund for your parents' old age. So these are just some of the examples. And you don't need to restrict yourself to this. It could also be building your business. For that, you need to collect funds. You need to collect finances. So think about it, okay? Think more and more about it. See, write down. The best way is to write down. What is it that I really truly want with my finances? Like, I'm clear, I want my financial freedom. Okay? I want to live a comfortable life. A very, very comfortable life. A bit of a luxurious life also. Okay? So, I am playing for that. Yeah? I want to make a contribution. Maybe you want to start an NGO. Maybe you want to, bring something to the world that doesn't exist. Some kind of an innovation you want to bring forth. And for that you need money. So you need to just sit down with your own self, give time to yourself and write down. What is it that you truly want? And then when you give yourself a time horizon that, okay, by this year, so and so date, I want to reach this goal and this is the kind of money it takes, the current value of the money, then it becomes a financial milestone. But do remember that the current value of the money will be different from the future value. Because future value will have inflation attached to it. So whatever money you need in right now is not the money that you will need in the future. In the future it will be much more money. Okay, so just remember, future value will be more than the current value. So that's about financial milestones. Then another question from Shilpa is, what are the best stocks to invest in? Okay, you are asking for tips, and this is not the right place to ask for tips because we are not financial advisors, we are not brokers of any kind at all. Brokers and advisors make you dependent on them. So you depend on them for the rest of their lives. We are in the business of making women financially independent investors. We are in the business of helping women learn how to make their own intelligent, knowledgeable financial decisions. So if I tell you what are the best stocks to invest in, I defeat the Women on Wealth purpose. Right? I then make you dependent on me. And then that's not my job. My job is to help you make independent investment decisions, independent financial decisions. So here is what I will tell you. So you want to identify best stocks to invest in. What are stocks? Stocks are companies listed in the stock market. So if you want to identify good quality stocks, you need to go back, look at how good this business is, because if stocks are companies, then companies have businesses. So how well is the business performing? How much debt it has, how much profit it is making, how much free cash flow it has, who is in the management of the business, how old the business is, how profitable it has been, what are the returns it has generated for its investors, what is the return it has generated on the capital employed, etc., etc., etc. Okay, so there are many things that we see when we are selecting a good quality business. And if you really truly want to learn this, it takes us at least over 15 hours to explain the entire step-by-step methodology to pick good quality stocks. And equally, it will take you another 15 hours to practice. So this is not something that can be shared in 5 minutes. So if you want to learn this, know that tomorrow, which is Saturday, we are doing a free introduction to stock investing. Okay? And okay, my video was paused. I'm back. Okay, so this free introduction on Saturday we are doing 3 p.m. It's a free introduction to stock investing. So if you want to learn the couple of first few steps to begin identifying good quality stocks, you must show up for this webinar tomorrow. Just DM us your WhatsApp phone number and your full name and email ID, and we will send you the invite to join the webinar. So yeah, come in, learn, begin on your financial education is my invitation. Okay, next question I have is from Khushi. And Khushi is asking, how do I make investments to save tax? So great question. So there are various ways to save tax. So under section 80C of the Income Tax Act, you can save up to 1.5 lakh rupees. And this can be saved by investing in tax saving mutual funds, provident fund, NPS, ULIPs, and many other such policies and schemes. Tax saving mutual funds are the best performing investments when it comes to tax saving. NPS is number 2. So if you know the step-by-step methodology to pick good quality mutual funds, then the best way to save tax could be tax saving mutual funds, ELSS, also known as ELSS, Equity Linked Savings Scheme. However, if you don't know how to select good quality mutual funds, then it's best to not go and invest in mutual funds. Because if you are investing on hearsay, then you are making a mistake. So don't make that mistake. First learn and then invest. Example, when we want to earn money, we first take a degree and then earn. The same way in finances, you learn, you become financially educated, and then you invest. So learn and invest. If you don't want to learn, then stick to the old methods like Provident Fund. You can save in NPS too. So there is now an additional 50,000 rupee benefit. This is over and beyond 1.5 lakh that you get. And you can do that in the national pension system. And this pension system will, like the name says, it will give you a pension at the time you retire, and also it will give you certain part as lump sum money when you retire. So it's a combination of the two, which is NPS. And then of course there is money that you can save, which is up to 25,000 rupees in health insurance, and whatever premium you're paying. So that can be, tax saving can be done there too. And 50,000 rupees if your parents are senior citizens and you're taking a health insurance for them. So these are different ways in which taxes can be saved. And yes, if you run a business, then all the expenses can be shown, and taxes are then paid on the profits that you are making. So running a business helps you also reduce your tax. So yeah, that's what it is. So I have answered some of the questions. Let's see. Okay, Namrata, you're asking where can you learn about mutual funds properly? Well, you can learn them at Women on Wealth. We have an entire course for you. It's called the Women on Wealth Money Gym program, which is your personal finance blueprint, where you learn the step-by-step methodologies to pick good quality mutual funds. You learn the art of building an investment portfolio. You learn the art of diversification. You learn the art of financial planning and more. So, Namrata, DM us, reach out, and you will learn. Okay, sure. Namrata, you're saying I saved this live? Sure. Sure. The link will be right here for you. Okay. Yes, you all are sharing what you want. You want passive income, luxurious life. Got it. Okay. You want to buy a real estate, which is brilliant. What is equity income? So I am assuming, okay, because the word is equity. So I am assuming that what you mean is income from equities. So say, what is the income that you get from stocks? That's called dividend, right? You get a dividend also from your mutual funds. So yeah, so dividend from stocks, dividend from mutual funds, equity mutual funds. So equity is investment in the stock market. So if you're doing it through the mutual fund route, then indirectly you are investing in stocks. If you're doing it directly, then you're investing anyways directly into the stock market. So yeah, that's equity income. Okay. Yes, fixed income investments definitely give you lesser returns, absolutely, because the fund that you're investing in there is absolutely safe. Got that. So thank you everybody for participating. If you have more questions, do send them in. We will answer them in the next Fortune Friday Ask Me Anything series. Okay, I have another question coming in. Let me see if I can answer it. Can you guide about real estate investment? Is it profitable now in COVID days? The property market has a very, very long cycle. So if you notice from 2001 to 2008, it was a boom in the property market. And it continued until 2011. And then from 2011 to now, there is hardly any movement that has really happened in the property market. Number two, so one is the property cycle is very, very long. Number two, if you are investing your hard-earned money in return of some income that you can derive as rental income, then the rental yield is hardly 2% or 3% of the money that you are investing. So if you're doing it for an income, it's hardly much. Okay, it's hardly anything. Yes, if you want to live in that house, you have a 10-year horizon, you can see that you're going to live in that house for at least 10 years. Sure, go ahead, invest in it. Okay, go ahead, invest in it and enjoy it. But yeah, if you want to do it as an investment to generate an income, it's not a great investment at this point. But yes, if you've already invested well in stocks, mutual funds, gold and other investments, and now you want to diversify into property, go ahead. Yeah, go for it. Okay, thank you so much for listening. On this note, I'm closing this live. Do keep participating. If you have more questions, please bring them in, send them to us, DM us, and we will answer them in the next Fortune Friday Ask Me Anything series. We do them every Friday from 4:30 to 4:45 p.m. On this note, closing the live. Thank you for participating. Take charge, stay safe. Bye-bye, everybody.